Bearish sentiment continued in the Nigerian markets this week, but the market performance year-to-date is still impressive at over 20%. And I have Feyisike Ilemore, a research analyst at RMB Merchant Bank. She joins me now for some updates on the market here. Thank you so much, Feyisike. Looking at how we're seeing the markets play out, though, for you, what's driving these bearish sentiments we're seeing play out?
So the bearish sentiments we are seeing is because of what we're also seeing in the fixed income markets. If you remember, sometime last week, the MPC came out with their decision to hike rates by about 150 basis points. And we also saw that following that announcement, there was an NTB auction, and we saw the long end of the T-bills, the 1 year, close higher, almost about 170 basis points higher than last top rate. And so because of that, we are seeing portfolio investors move more of their funds to the fixed income market away from the equities market. Also, when you talked about year to date, we're also up 20%. At this point, you expect that investors will take profit. So these are the factors that are driving the bearish sentiments we are seeing in the equity markets.
But when you look at how the market has done so far this year, looking at the second quarter specifically, we're seeing in the month of May that we just finished, the market still came in with an impressive 8.1% again when you look at how things played out. Do you think we will see that play out going into the third quarter?
No. So if you recall, the performance in the month of May was following was more of investors reacting to the first quarter results. The first quarter results came out in April, towards the end of April, and then we started seeing investors react on that result in May. If you recall, consumers, they did so well. Many of them reported good earnings, good top line, good earnings, as well as industrials. Also, MTN did well. Now I'm focusing on the stocks that weigh a lot on the index. MTN performed well in the first quarter. Dangote Cement performed well in the first quarter. Likewise, Airtel. And so we saw investors react positive to those results, and that's what drove the 8% month-on-month gain we saw in the month of May. And with that continuing in the month of June and into the second quarter, I do not think so, because at this point you expect investors to take profits now.
All right, but in terms of a catalyst that could drive the markets going into the third quarter beyond the results, so what else do you see down the line?
So anything that will drive an improvement in volumes and share price performance in the equity markets in the third quarter will be more reforms and reforms focused on improving foreign exchange liquidity, because that is where that is the major thing that we are facing in the economy. If there are reforms that would, if there are changes or reforms that would improve FX liquidity, then we'll see an improvement in share price performance. Also, crude production volume. So we're seeing high crude oil price. We're not seeing that translate into higher external reserves, and that's because our production is, way lower than even the OPEC target. Now, if there is a turnaround in that space where we are now producing at the level that OPEC has targeted for us, and we are seeing that translate in higher external reserves, then we'll see the market start to reprice some of the stocks that they've priced lower because of FX illiquidity.
All right, but looking at how corporates are tapping into the markets, though, I just read that story about UACN and their commercial paper drives there. What do you make of the environment, and how ripe is it for corporates to tap into the market here?
So now that the MPC have raised the monetary policy rate, and also we've seen yields begin to trend upward, this would seem like a time that is not conducive to raise bonds or debts. But then again, we need to also look at why the company is raising money. They actually need this money to fund working capital to move their business forward. And when you look at the inflationary environment, that has really affected the working capital of many of these corporates, and they have to continue to produce to meet the demand out there in the market. So even though yields are not favorable at this point because of the move we've seen from the MPC, I mean, the corporates have no choice than to borrow at that rate just to ensure that they continue to meet demand and remain profitable into the near to medium term.